Okay, welcome everybody to the meeting of OHA's Committee on Resource Management. It is Wednesday, March 6, 2024, and I am officially calling the meeting to order. Joining us today are the committee members, Trustee Hulu Lindsay, Trustee Galuteria, Trustee Danahuna, Trustee Souza, Trustee Aquina, and Committee Vice Chair Luana Alapa, and myself, as well as joining us also virtually is Trustee Akaka and Trustee Trask, giving us the quorum to conduct the meeting. Also supporting us, supporting the teleconference, our support staff, Crane Aquina and Melissa Winahan. And joining us is our Pohana, Stacy Ferreira. And at this time, I would like to give Stacy the floor to introduce the other staff that are joining us as well. Stacy, Pohana.
Aloha Kakahiaka, Chair, Vice Chair, and Trustees. Joining us today from administration is COO Casey Brown, CFO Ramona Hink, Endowment Director Ryan Lee, Director of Community Engagement is Niniao Kavaihai, Director of Research and Evaluation Carla Hostetter, Grants Manager Kiala Newman, IT Systems Administrator Dave Kozuki, and IT Systems Administrator Kevin Chalk. Mahalo for having us.
Thank you, Pohana. Members, we're going to move on to the approval of the minutes, and it is my understanding that we do not have anyone signed up to testify on this item.
That is correct. 0 registrants to testify on this item and all other items at this time.
So there's a motion by Trustee Hulu Lindsay to approve the committee minutes of February 7th. Is there a second? It's been seconded by Trustee Souza. Is there any changes to these minutes? Okay, since there are none, can I get a roll call vote for their approval?
Trustee Ahuna,
Aye.
Trustee Akaka,
Okay.
Trustee Aquina,
Aye.
Trustee Alapa,
Aye.
Trustee Galateria,
Aye.
Trustee Lindsay,
Aye.
Trustee Souza,
Aye.
Trustee Trask,
Aye.
Chair Waihe'e.
Yes.
9 yes votes.
Okay, the minutes are approved. As we have no unfinished business, we will move on to the Native Hawaiian Trust Fund Investment Portfolio Review. And I will turn this over to our Pohana Stacy Ferreira to present this. Sorry, April.
Let's update the template.
Mahalo, Chair. Okay, at this point, I would like to invite our Endowment Director, Ryan Lee, to join us. And, mahalo.
Aloha, everyone. It's great to be here in person. Melissa, could you put up the slides? Great. So good morning. I'll be reviewing the Native Hawaiian Trust Fund Quality Performance. You should have all received the quarterly report from Northern Trust about a month ago. Typically, reports are released a month after quarter end. And administration in the past has presented performance updates, so we'd like to get back on track in updating the trustees more frequently. So I'll be highlighting key areas of the performance rather than going through the entire report. Next slide. So I'll be covering market overview, quality performance, evaluation of performance relative to the policy index, peer group comparison, asset allocation, as well as a draft dashboard the administration has been working on. First of all, does everyone have the slide? I have copies, hard copies. Terrific. So next slide. So this provides a backdrop of the market for the last quarter. So major asset classes actually saw.
Wait, Trustee Trask. Trustee, you think? Yeah, you're muted. Okay.
The table of contents that you show on your screen is not what was sent to me on the neighbor islands. So following this, I need to have this sheet replaced. Right, but the table of contents is incorrect. Okay, let's go ahead.
Okay.
Sorry, go ahead, Ryan.
So starting with the market overview, just at the backdrop of the quarter ending December 2023. So major asset classes rallied after a series of softer inflation reports in US and Europe. So basically leading the Federal Reserve that they're done raising interest rates. So as you know, markets are forward-looking. So when markets think the Fed is done with raising interest rates, meaning that the economy is in balance, inflation and employment are in balance, this is typically positive for financial assets. So what you've seen over the last quarter is that a lot of the major asset classes rally. So if you look at the chart on the bottom, it highlights the major asset classes from fixed income, equities, and real assets. Focusing on the blue box, equities rallied, returning. Let me go back. In terms of the chart on the bottom, the bar charts represents the quarter returns for the asset classes, whereas if you look below, the row below represents the returns for the year. So when you look at the blue boxes, global equities rallied 11% for the quarter, 22% for the year. US markets, A, led the way at 12.1%, whereas non-US markets, B, returned 10.6%. When you look also at fixed income, which is represented in the orange box, C, the Bloomberg aggregate returned 6.8% for the quarter. So when there are expectations that interest rates would be coming down, bonds also rallied. So basically it was a good market overall. So what does it mean for the Native Hawaiian Trust Fund performance? Can we go to the next slide? So for the quarter, Native Hawaiian Trust Fund ended with a market value of $548 million, a $35.1 million increase, or about a $55.8 million increase for the calendar year. As mentioned, in this market environment, the backdrop, the returns were strong. For the quarter, the Native Hawaiian Trust Fund returned 6.4% versus 8.7% for the policy index, underperforming by 2.3%. But with the Native Hawaiian Trust Fund, it's invested in private equity assets, which tends to have delayed valuations. So when we look at another benchmark that we use with a lag version, it returned 6.1%. So it matched closely to the returns of the policy index. I also highlight the fiscal year, which is June to December. The trust fund returned 5.1%, as well for the calendar year, which returned 11.9%. But it's important to note that as long-term investors, we need to focus on the long-term results. So looking at the 10-year, which is highlighted in D, the green box, over the 10 years, the trust fund annualized 6.5%, underperforming both the policy index and the long-term objective of CPI, which is the Consumer Price Index +5. Now, this underperformance reflects the investment program structure and decisions that we made over the last 10 years. But on a go-forward basis, there's opportunity to update policies, as well as portfolio implementation to improve longer-term results. Questions or comments before I move on?
Trustee Aquino.
Thank you, Ryan. This is very helpful. Our market value of $548 million that you have here is one of the highlights. When do you anticipate that will hit $1 billion?
that is something that we would be looking at within the asset allocation modeling review. It will take time, but I think if we maintain a long-term objective and discipline in investing, there's a time frame that we'll get there. I'll get back to you on that.
Well, your report in the following pages shows that most of our accounts have actually grown since inception. If we have the same kind of growth, what do you estimate the time frame would be to get to $1 billion?
I would need to get back to you on that.
Thank you.
Trustee Hulu Lindsay.
Ryan, the 64 million that was given to OHA by the state of Hawaii for back revenues, is it part of this 548 million?
That is correct. That is correct.
So that's not from any portfolio investment.
It's a combination. As you remember, 2022 was a difficult year for the portfolio. I believe it was down about 11%. So along with the contribution and investment returns, the portfolio recovered most of those losses in 2022, but also there's some gains that reflect this year.
Thank you.
Opohana.
Aloha, Ryan. So I just wanted to go back to Trustee Akina's question. And I know you're going to get back to him on a more precise response. But to your point, if we update our investment policy as you're currently working on, and we look at managing the portfolio in ways that you're suggesting, that increase is very likely to get to that trajectory, to have us hit that.
Correct. And you need to put a portfolio that can achieve those type of returns over the long term, right? So you do need to be active within the portfolio, but focus on the long-term investment, which is critical to attaining that $1 billion target that you're referring to. Okay, perhaps we can go to the next page. So basically, this is a evaluation of the performance against its policy benchmark. And it's more analysis of where the outperformance or underperformance is coming from. So this is really highlighting that the performance gap. This is actually really, I'm sorry, I'm thinking, let me step back. This actually shows where the performers, where the underperformance is coming from, which is the private equity, which I've highlighted, right? So over time, as the market valuations become available, the performance gap should narrow. Can we go to the next page? So,
Wait, Trustee Aquino.
Thank you, Ryan. What I heard you say was that the underperformance was coming from private equity. What is the point that you're trying to make with regard to that?
that because we're investing in private equity, it's a long-term asset class and it's one of the highest returning. You need to focus on the longer term results when evaluating a private equity program. When you look at shorter term results with private equity, because of that delayed valuations, it doesn't give you a good picture of the actual returns. You need to focus more on the longer term results to evaluate the success.
Thank you.
So that's what it's meant to highlight. Now, the following page looks at the Native Hawaiian Trust Fund compared to its peer group. So this is looking at other endowments and foundations of similar size, about 118 institutions. So what this tries to say is, where does OHA, Native Hawaiian Trust Fund, returns fit compared to its peers? So it's best to look at over the long term. Unfortunately, we only have 5 years, but we'll use this data to at least highlight where the Native Hawaiian Trust Fund falls. So if you look at this chart here that's highlighted in green, the 5-year returns are slightly below median compared to the peer group. The point I want to make here is that on a go-forward basis, the goal for the Native Hawaiian Trust Fund is to at least target first or second quarter returns above median. I mean, that aligns with the strategic plan of increasing the value of the Native Hawaiian Trust Fund. Questions or comments on this page? We're right in between the orange and gray. So the green box that you see is the OHA portfolio. Next page. So this is a snapshot of the asset allocation as of December 31st, 2023. And this table shows the current weights versus the policy targets. So the bar charts on the left, you can see the actual data that's on the bottom. So what you see on the bottom is what the actual weights of the asset class versus target, as well as the policy ranges guidelines that has been established. So currently, asset classes are all currently within the policy guideline ranges, which are highlighted in green. In terms of current exposure, we're currently overweight to public equities and real assets, which offsets the underweight to private equity. At the same time, with the underweight to fixed income is also offset by the overweight to cash. When we look at future activities for the portfolio, the cash balance is expected to decrease as the portfolio is rebalanced back to targets, as well as supporting organization spending. You can remember we draw about close to $3 million per quarter from the trust fund, the fund operations, so that cash balance will come down. At the same time, we talked about restarting the private equity program. So these commitments over time should decrease the underweight. But again, it will take time to build that exposure. So we're also, as you know, working on updating the asset allocation, investment policies, and portfolio implementation. That process, that work would help align the portfolio back towards the long-term objectives for the portfolio. Questions or comments on the asset allocation? Again, this is a snapshot as of the quarter. And so we,
Stacy,
Mahalo, Chair. You can finish what you're saying and then I'll.
I'm
add.
sure, I just mentioned this is a snapshot, and asset allocations are monitored on a monthly basis to make sure that we're in compliance. But it's updated to the board at least quarterly.
And then I just wanted to add on to Ryan's report that Ryan and I will be setting up one-on-one meetings with each trustee to follow up on this report so that we can have more customized conversations around any questions, concerns, and be able to have more in-depth conversations with each of you. Mahalo.
Okay, so I'll just go briefly over the dashboard that we've been working on. Next page, Melissa. One more. So this is future reporting that we're working on along with the updates we're going to provide to trustees. So it's a quick way of looking at the trust fund portfolio, know what the portfolio risks are, the asset allocation activities that are happening within the portfolio. So this is what we're proposing to present to trustees more on a frequent basis to update the trust fund activities.
Very good.
Thank you. Any questions?
are there any questions, members, or any comments?
So
Oh,
is-
okay. Oh,
is-
thank you, Ryan.
Thank you.
Yeah, good job. Okay, members, we are moving on to new business. Oh, sorry, Trustee Trask, did you have a question?
Yes, I wanted to point out that the 48-hour notice requirement and the attachments to it are not the attachments we're going over in this board meeting. I think that will require that this be reposted. The data that was sent to me at my office is the data that was posted on the 48-hour notice. But that is not what was given to us today. I received your information, staff, at 10 minutes after 10, when I opened up and told you all that we did not have the correct data. And my secretary has just now checked the public agenda and it wasn't put on. When I reviewed the first information sent, I noticed that there was a significant change in its staff. The document that you have as financial assets dashboard now has a draft stamped on it and other pages attached to it that were previously sent under the publicly noticed agenda have been deleted. And I want the record to reflect that I'm concerned about it because in the original documents I received from our staff, there is a document, OHA Financial Dashboard Q4XX staff, OHA Financial Dashboard Q4XX, which shows operating capital expenses, spending policy metrics, and endowment performance. Can you explain to me, staff, why you removed that? And I'll tell you honestly that I was shocked to see it. This is the format for the Bishop Estate. We don't have any endowment in OHA. We don't have it.
Ramona,
What was posted here did not go out on the public agenda.
hey, Ramona. Oh, Ramona, sorry, you're still muted.
Thank you, Chair.
Thank you.
Good morning,
Thanks.
trustees.
Good morning.
Ryan, could you go through that slide that has the endowment definition? Can we bring up that slide again? And also the connection to our memo.
Melissa, could you bring up the slides again, your summary? Page 6.
So on the bottom, there is the definition of an endowment. Is a pool of assets set aside by an institution to provide ongoing financial support for its operations or specific purpose. Endowment funds set aside usually comprise cash accounts, equities, bonds, or other assets. Over time, through income generated from investment and capital gains on the investments of the original assets referred to as corpus increases in value. So we have a specific strategic OHA endowment strategic outcome for this. At the top is to increase value of investments in and the value from financial, commercial, and land resources. And that's our strategy 9.1, the increase in the value of the Native Hawaiian Trust Fund.
I understand what you're doing, Ramona. I understand it. It is not an endowment. And OHA is a state agency, not like Bishop Estate. Do you know what I'm saying? You can make a definition here, but it is not considered an endowment. It's not. The Bishop
Okay.
Estate, I agree. The Bishop Estate, it's very clear. But here, it's not an endowment. We're dealing with public assets. And when I take a look at the documentation that was made public, and where we are now, I I understand concerns of people calling me saying, why is OHA looking at an endowment? You're not the Bishop Estate, and I agree. That's why
well,
these documents, endowment performance. I see you have a definition, but it's not a legal endowment.
But we have assets that we want to manage as an endowment, similar to Kamehameha Schools. We
I
have-
understand that, but that is a policy set by this board. And it is not a policy that is set by the staff. I could not find a vote at any point over the last 2 years. I can't find it, where OHA is saying that as a matter of our fiscal policy as a state agency, we're going to set up and run management of finances as an endowment, as Bishop Estate. And that is what came up on the documents. I didn't understand the calls, but I do now, because these documents were switched.
Well,
And the first document that went out does include a endowment performance. But we're a state agency, not Bishop Estate.
I think that the data, I'm pretty sure the data and the information reflected in the first draft or the first documents that went out are the same. What was we attempted to do was just to bring clarification to each of the slides. So the information presented did not change. In the draft of those dashboards that were also attached to the report, the first slide was taken out only because it has to do more with financial reporting than investment reporting. So
I understand that, Ramona, and that's my point. There's no bifurcation, financial reporting or investment reporting to this board. Because part of the way we handle our financing is to look at appropriate investment, but we do it as a state agency. And here what I see is that the executive staff has actually characterized it in the same manner that you all did when you worked for KS. We don't have an endowment. We don't have an endowment. You
Well,
know,
don't we-
this thing was, I'm concerned because I already got calls on it. We're only a few minutes into our meeting, but what was posted on the public agenda has already been seen. And changing the graphics after the 48-hour period is not allowable to state agencies. I'll follow up in writing.
Everett Olta.
Thank you, Chair Waihee, and good morning, trustees. I just wanted to speak to the meeting materials that the trustees had received. The Sunshine Law requires that we post our board packet, what we refer to as the meeting folder, no later than 48 hours prior to the meeting, if we're going to be sharing materials with the trustees ahead of a meeting. So that what was done here. However, there were revisions made to that slide deck, but they were unable to be shared with the trustees prior to the meeting and within that 48-hour period. So that's why the trustees have a different slide deck than what was shared at the presentation by Ryan just now. And it's because we're restricted under the Sunshine Law from making those changes within the 48-hour period. But it's not to, that's also just to ensure that the trustees, the board members receive the same information as the public prior to the meeting, rather than having access to additional materials. So at the same time, the public received that information in this presentation. The trustees also received that information per Sunshine.
It's a violation of the Sunshine Law, Everett. And when you change the data, such as what you did, it's not a mistake. We do not have an endowment. We are not the Bishop Estate, and public information went out incorrectly. We're a state agency, folks. This is a major problem, major. Because what it shows me is that a lot of our staffers who have come from Bishop Estate are reporting to us in manners appropriate to the estate. You know, I'm trying to avoid litigation. We do not have an endowment, and we should not be managing assets in the way that others do, and in the process violating the state sunshine law.
Okay, if there are no further questions, the next item is our recommendations for Native Hawaiian Trust Fund. My understanding is there's no one signed up for this one.
Yes, Chair, no one is signed up to testify on this item.
Okay, then I will turn this over, I'll turn this over directly to Vjoy Chatterjee, the investment. Hey, Vjoy.
Aloha kākou, Chair, trustees, nice to see everyone, staff, as well as other invited or attending stakeholders and interested parties. Thank you again for having us address the RMC. As you know, we are the board consultant, Consequent Capital Management. My name is Vjoy Chatterjee, and I have a couple of documents, a presentation and a marked up investment policy statement from 2021 that I'm going to talk to a little bit today. I do want to note that previously we talked about coming back and making some recommendations to the board, possibly at this meeting. But instead of that, I'm continuing to keep us in that problem space as opposed to solution space. And what I've done is I'm trying to highlight areas that I think that ultimately you're going to want to have recommendations and vote on to manage the investment program. But as we're still in problem space, the conversation today is more getting ideas on the table, thoughts about where we might go. So when we do come back and make sort of hard recommendations, everyone is had a chance to kind of evaluate and comment on that. And I think that's very important. When I worked in Japan many years ago, they had a concept called nemawashi, which is, I have to be careful here because I'm skirting, I'm not Japanese. So I'm going to give a concept of a cultural term to a Native Hawaiian leadership group, which I am also not Native Hawaiian. So I'm really on thin ice here. But this concept of nemawashi, the way I interpret it, it was kind of like the meeting before the meeting. And there are other ways to think about it, the communication and the need. And so when I draw on that in terms of what we're trying to do for Consequent for the trustees and staff is to make sure that before we start coming in and saying, oh, you should do this or do that, we have the meeting before the meeting. We have some consensus, not that everybody has to agree, but we at least evaluate, we hear from everyone, and we try to accommodate a program that's going to work for you going forward. Of course, with the idea that any program, any policy statements that are created ultimately can change over time, and there should be a process for that. So I'm problem space nemawashi with people, and I did have a chance to talk to a lot of the trustees, though not everyone, and also with CEO and her staff as well. But that's kind of where we are. So in terms of the presentation, you've seen this before, and I am aware that there's some activities after this meeting. So even though I'm a former CIO and I, that means that we love to talk and we think that what we're saying is really important. I'm going to try to move along. And if chair or someone wants to say, hey, we need to get going, I totally understand, no offense. And, I'd like to continue to nemawashi meet with you outside of the meetings to get to where we need to. So just like before, our PowerPoint presentation is similar to the way we present to you in general. The background information is there. We're going to update a little bit on the activities, and then this policy review recommendations, which again aren't really strong recommendations at this point. And then we have a glossary of terms like we try to include with some that are relevant specifically to this conversation. And then separately, we had distributed your Hawaiian Native Trust Fund investment policy statement as it was adopted in 2021, where I've made some highlights and some red lines. And again, not making recommendations, but trying to draw your attention to the areas where I think that we will need to address going forward. And of course, that's all driven by yourselves as opposed to us, the consultants. And just before going on, let me just say something nice about the staff's presentation. I think it was terrific that they've come back in front and are presenting the quarterly report, and that they are doing a lot behind the scenes. The difference between your own staff and a consultant is kind of that breakfast analogy about the chicken and the pig. You know, the chicken contributes to breakfast, but the pig is committed. And so, you know, that's one way to keep in mind that in terms of how we work with you, you know. Not to make anyone hungry, but if we turn to page 4 of the presentation, this is kind of just a review. You know, last time we provided some education in terms of just observations, really, not so much education and the highlights there. You know, we focus a little bit on overview and governance. In terms of resourcing, I wanted to emphasize, you know, you think about the people and the material that you use, but the other concept that we brought out that I think is important is this idea of your sort of brand, intellectual property. And I'll talk a little bit about that in terms of the Common Fund conference that's coming up. But that I think is something to think about. The investment program and design, you know, that's what we're going to go into more conversations about in terms of recommendations. And I have spoken to Chair about maybe possibly doing some of those conversations, not only in public session, but in executive session. And I understand in order to have that approved, obviously, because of sunshine laws and other rules, we will have to get that approved by your lawyers to be able. But if we can have kind of a open conversation, not make any decisions or vote on anything, obviously that has to happen in public, but to be able to talk about certain items and issues with the portfolio that arguably are confidential in terms of the business secrets of your managers. And, you know, for us to talk frankly, you know, we don't want to put OHA at a disadvantage because people will say, oh, you're just going to talk about the way we trade or invest in public. And that has precedence with other Hawaii asset owners. But again, that will be for this meeting. We'll be in public session, but maybe at a future meeting. And then the last thing that we went over a little bit, not in too much detail, were the different asset classes that are in the portfolio. You have the traditional asset classes, and then you have more functional type growth and other types of definitions for how you classify your assets. And for the trustees, if you recall, the one thing I kind of went back to was my high school chemistry teacher who said, you know, you have to wake up in the middle of the night, and if someone asks you, what is a mole, you have to know that it's, you know, whatever, 6.2 times 10 to the 23rd. And that's the one thing I remember from high school chemistry. But there are some things in the asset class that it would behoove you as trustees to at least be able to wake up and be able to say that, you know, what does it mean to be private equity? What are the types of strategies, and what is the allocation that OHA has for it? And then ultimately, why is it in your portfolio? If you can kind of answer those questions for yourselves, for your constituents, for the general public, that will take you a long ways to really feeling comfortable and understanding how to manage this portfolio. But obviously you can go a lot deeper, and many of you have expressed an interest in going a lot deeper and learning about more. So that is just sort of like the minimum. So, you know, thank you, you know, Professor or Teacher Logasso, that's my use of your lesson here. In terms of the investment oversight preview, that's our list of kind of what we expect at upcoming RMC meetings. The one thing I want to emphasize, because it's right upon us, is that I know that A number of the trustees and staff will be going to the Common Fund Conference, as you do every year. I think it's in Orlando. There are hopefully, when I spoke before about, when you hear an investment report or you talk to a manager, you kind of have an idea in your mind why you're having the meeting. You have a thesis, if you will. So I'm sure you're going to be attending the event and have your own reasons and questions for the Common Fund and what you want to see and get out of the event. One thing I want to suggest is that you also take that time when you're a Common Fund to educate Common Fund about OHA, because what that intentionality brings to anyone in the capital market space, any of your managers, is an understanding of why they managed money for you. Because I guarantee you, they probably don't have a good feel for who OHA is, why you exist, what your mission is. And part of, as any investor, and I've done this before when I was an asset manager, is when I meet with a manager, I'll actually pull out my own presentation before they give me their presentation. I want to tell you about my group. I want to tell you about what's important to us. And now you present to me so that this makes sense. So what I'm suggesting is, in terms of one thing maybe to get out and of any meeting, but just because you have this Common Fund coming up, is to make sure they understand who and what OHA is and why they're managing assets for you. And that's something that you can do as like an ambassador for OHA, really. I mean, I know you're the trustees, you're elected officials, so you do that all the time on behalf of all the issues you deal with. But in terms of the capital markets, that could be a goal and an intentionality of the meeting. So just a suggestion, again, I'm just the chicken, I'm not the pig in the breakfast. So I'm just trying to give some ideas that I would do. In any event, why don't we move on to page 5? And in here, I'm talking a little bit about how you've defined your objectives. Again, on the left side, it's sort of takeaways and thoughts, and then on the right side are some bullet points. Now, on the right side of this page, these bullet points come directly from your investment policy statement. So there are 4 there in terms of your objectives, what you're trying to achieve. And the important thing to take out of them is the first bullet point is that you want to grow. You want to grow this portfolio. It's important, not just because you're trying to get good returns, but because this is what you need into perpetuity for the Hawaiian people. So that's an objective that you have. The second bullet point, the takeaway, is that you want to preserve your purchasing power. You want to preserve the value of your portfolio. And that's a great objective to have. And I think that, that means all of these objectives, they imply certain things. If you're saying you grow, that means, okay, we better invest in equities because they seem to grow over time. Preserving purchasing power means we're concerned about inflation. We want to make sure that, $1 today is going to be able to buy $1 in 10 years. And we know that inflation eats away at that. So that's a second objective. A third objective that you have in your investment policy statement is a focus on portfolio return. And I want to emphasize the thought there is that it's not just, oh, did you get a good return in private equity? Did you get a good return in fixed income? It's the portfolio return. And while you might dig into individual asset classes, you may even want to ask, is this manager someone we should be working with going forward or not? The overall view and mission of you as trustees is, how is the overall portfolio doing? Is it meeting the objectives I need to, or you as a group need collectively to fund the programs that you've identified that you want to fund to help the Hawaiian community? That's why the portfolio exists, right? Is ultimately to fund that mission. It's not, we're not an investment agency. We're not an asset manager. So that bigger mission is reflected in the language here, that it's the portfolio return. The last thing there is about diversifying. So that's a thought about volatility, which we've talked about, right? And how that can be negative in the portfolio. Again, you may want some assets to be more volatile than others. It's not saying that you don't want volatility, but you're not a trader, you're a long-term investor. And as a long-term investor, one of the ways, and I think I gave you a list of several ways to manage volatility, but one of them certainly was holding a diverse portfolio of assets, of strategies, of fund managers. And so these are very good objectives that you have defined here. The other thing, I put a sort of I don't know, I call it a vision, a statement on the left-hand side of this page, you know, in terms of, again, it's just a draft and a suggestion, but trying to articulate, you know, what it is that you're trying to do, what's your objective, right? Again, defining the objective, go back to that idea is like, if you had to save the world in an hour, spend 55 minutes trying to define the problem and spend 5 minutes solving the problem. So what is it that you're trying to do? And so I talk about building this, you know, investment program and supporting the mission overall. You can read that and you can take it or leave it, but I think that's something that you maybe want to do. And how you might express that in terms of your investment policy statement is you may want to come up with a statement or a bullet points of your beliefs in terms of the capital markets, in terms of investing. There are some very prominent funds, asset owners out there, some of the California plans that include in their statements about who they are is what do they believe? And by belief, again, this is focused in on the capital markets and the investment portfolio. So the belief is like, do you believe in efficient markets? Do you believe in long-term investing? And they will say affirmatively what they believe. And it may be worth an exercise. And I'm thinking I can come back maybe at the next March meeting and give you some ideas in terms of listing, you know, because when we know what your investment beliefs are, it like these objectives help to shape the kind of opportunities you want to look for in the portfolio. And it also is a nice educational piece. It's a shortcut for all of you, but like if there were new trustees to come in the future, right, it gives them a shortcut to kind of say, oh, this is what you believe. This is what we believe. You agree with that? Should you invest and guide that way? So it's also kind of a teaching tool, if you will. Okay, let me move on a little bit. And again, I don't want to.
Sorry, Vijay,
I'm
trustee
going too fast.
Aquino.
Vijay, thank you. And thanks for reminding us of our objectives here. With respect to growing the fund by inflation plus 5%, let me ask you two questions. The first one is, do you see that as possible for us, as a feasible objective to continue pursuing? And secondly, if so, let me give you the question I gave to Ryan, and that would be, how long will it be for us to get beyond the 548 million to $1 billion?
Okay. So the first question, in terms of how you want to, whether that's a legitimate objective, the 5% plus inflation, it's certainly a very acceptable and objective, and it's a proper way to express that. The question and where you want to review periodically is when inflation is changing a lot, right? And and it's not really just inflation today, it's the future expectations of inflation. So it's not just today's inflation rate plus the return, it's sort of projecting forward over some quarters or an average of the past, and you think it's going forward and whether you can meet that. And that portion of even though it hasn't varied much over the last decade, it can sometimes be the part that surprises you, because you can plan for a 5% return, right? You have different kinds of investments that you're making and you project that, okay, and so that's fairly stable. That's the long term. That's why you're not buying and selling managers every week or every month. But that inflation, when it surprises you, that's always the danger. If you expect the inflation to be 5%, again, we can plan for it. It's that unexpected inflation that kind of arises. That's the problem. And so I think that it is a legitimate, I think you can achieve it, but you need to revisit it so often, right? You can revisit it on a schedule, sort of say, hey, every year or every 2 years, we're going to revisit that assumption. Or it could be on an ad hoc basis when suddenly, hey, the Fed just raised rates by 100 basis points. We need to revisit this, or do we not revisit it? So those are the ways that you would do that. On the second question about doubling your assets, that's really what you're asking, because you're about 500 million now. When do you be $1 billion? I think I think that staff, Ryan, will come back with a more detailed kind of, you know, idea of this is what and how do you project that out there. But just as a rule of thumb, and again, it's a rule of thumb, is the rule of 72.
Yeah.
So you double your assets depending on what your expected return is by dividing 72 by that return. So let's say you expect an 8% return, right? So 72 divided by 8 is 9. So you're going to get to $1 billion in 9 years.
Okay.
Now the conversation that you can have, your follow-up question, I'm sure, is like, well, Is that acceptable? Do we have 9 years? Do we want to do it faster? Do we want to do it slower? So if you want to do it fast, you want a 10% return, okay? But now this implies a lot of questions, right? So if I am saying, hey, the way your portfolio is built is you can get an 8%, you can get an 8% return into the future, right? Into 9 years or whatever, you'll double your assets. But, oh, you want a 10% return? That usually will imply you got to take a little more risk to do that. So are you willing to sleep at night knowing you got a little more risk in the portfolio because it's going to get me to my doubling of assets a little quicker, maybe like 8 months or something quicker than otherwise? So that's a conversation then you need to have. That's the Nemawashi, and then ultimately the vote that you guys have is like, we need more aggressive managers. But, you know, so these are the levers that you pull. So if your objective is like, hey, we want to double our assets, we think we can achieve a 7% return, a 10% return, or an 8%. What are you comfortable with? And then what does that imply? And again, what it implies is a level of risk that you have to tolerate. Again, I kind of look at the managing assets from a risk perspective first, and then I expect the returns to fall out of that. A lot of people look at returns. I just want the best returns, right? You know, and then, okay, that's what a lot of family office, I shouldn't downplay family offices, but, you know, I'm an institutional investor, so that's what we do. But they might have, you know, they think of risk differently.
Ryan, thank you. I mean, Vijay, thank you very much for answering that question. And what I'm getting at
But
really.
let me just, before you
Yeah.
go on to your next one, let me just say that a more precise answer.
Yes.
Because there are a lot of variables, and that's why I think Ryan says he wants to come back, because he wants to give you a more precise answer. There are a lot of variables, right, that go into that. How much is your spending going to be? Can you save more? Are you going to get more from the state? There are variables in there. So when I said, you know, you can double your assets in 9 years, it's rule of thumb. It's not a guarantee. Just to be clear, you know.
Thank you. And that helps us to weigh whether we want to simply accept the outcomes of our investment passively, or whether we want to drive an outcome toward a specific goal. Thank you.
Sure. Thank you.
Trustee Trask.
Ask, Vijay, because when you made the last statement about risk, you know, it brings to our mind what our fiduciary obligation really is for investment. And we really are, you know, there's a choice in terms of balancing risk versus gain. But I wanted to ask you, either now or in the future, trainings, because when I look at it, being a state agency with a fiduciary trust obligation and the incoming revenues basically being state, I'm not really sure what the measurement of risk is. When I read some of the backup materials that even at the OHA office, the advisory is that we should not be investing assets in a risky manner, and because it's public trust funds. But as you just said, you know, there's risk and there's risk. So, you know, the thing is, I feel like I'm going to need a little clearer statement about what is the risk that we can take. I mean, we're making different investment decisions. We want to make the best return. But on the other hand, sometimes in the market, when people play the market, they do take risks that I think are beyond what a fiduciary state agency could do. So I just wanted to ask you that, because we're talking about risk. And as you said, we want to minimize risk, but how much risk can we maximize and where? Thanks.
Yeah, thank you, Trustee Trask. Those are excellent comments and observations. And, you know, there are many ways to define risk, and you do want to go through an optimization exercise. And staff has talked about, doing an asset allocation and, kind of updating expected returns, and then how do you optimize that? So that's part of that exercise. But everyone should have a clear idea in their own minds, if not also collectively, of what is risk. Just again, off the kind of top of my head, most institutional investors, a lot of investors will define risk as the permanent loss of capital of your corpus. And so they're willing to take risk where maybe there's volatility in the portfolio, prices go up and down, the value goes up and down. But as long as you haven't permanently lost that for some reason, those are acceptable risks. And then how does that translate into the types of opportunities? Private equity, public equity, fixed income, hedge funds. Those are the conversations that you can have and the questions you can ask. And these are the kinds of questions that you should be putting to your investment managers as they come in the coming weeks, and also when you're in Florida with Common Fund. Long-term versus short-time, excellent, yes.
Trustee Hulu Lindsay.
Thank you, Chair. I just wanted to share with our colleagues, when Dan and I took office in 2012, 11 years ago, our corpus was 360 million. So from then until now, it's 550 approximately today, but minus the 64 million that the state gave us, that's where we're at over the 11 years period. So that's just to give us an idea how long it took us to get here.
Sure.
And we have since increased our annual public land trust payment to 20.5, 21.5.
That's
So just to give us an idea.
yeah. That's very helpful. Thank you. And also I should note that, when you talk about the future contributions and the fact that your investment portfolio is growing because you have positive cash flow, not every asset owner is that. And your investment manager should understand that, that because you're different in a way and you're growing. It's a great way to kind of build a portfolio and build that institutional wealth because you have positive cash flow. But there are a lot of institutions that actually these days, particularly in the pension world, that have negative cash flow. So making that differentiation in the minds of your investors should hone them into how do you manage and how do you get business from OHA. And that's part of like what I'm suggesting as a way to focus your activities when you go and see a manager like Common Fund. But thank you for that. Okay, again, I know that time is short, but if we could move on to page 6 of the presentation. In here, I are saying that there may be some immediate needs, and I know that in fact that staff is working on some of these the items that arise out of this sort of need to maybe consider the way the activities that the Native Hawaiian Trust Fund needs to manage forward. And so we talked about things like, doing an asset liability study, and asset allocation, sorry, not an asset liability, asset allocation study. So the revising the investment policy statement, I understand that's a process that staff has worked on. I'm looking forward to collaborating with them because I've given you some comments in the attached document related to the existing policy statement. So we'll look to work with them on that and look to present something. There probably is a need as a quasi-public agency to have something like a consultant or OCIO. And on the next page, I kind of break down different options that you might consider. Now, in addition to just listing those options, I think it's important that everyone kind of really understands what does that mean? What are the implications of having the portfolio managed in different ways? And then ultimately you as a board of trustees should select the direction that you're comfortable going in. The other thing we just mentioned was the asset allocation study. Then Ryan had brought up about the private markets needing to reinvest cash and capital. So that's another area that, it's clear that you need to return to the market for. And when we had Pantheon come in and the presenter Ian sort of talked about the fact that you weren't making new commitments, but they were still investing for you based on prior commitments. And so we haven't benefited from the fact that some of the more recent Pantheon funds have done better. But again, that's not to say you should guess, should we invest or not invest with a manager like that? You need to have a program where you are disciplined and always trying to get exposure to those private markets over time. And we can talk a little bit more about the kinds of tools you need to have that sort of discipline. And then a little bit on the design and implementation of the portfolio, moving to a more holistic approach to overseeing your Native Hawaiian Trust Fund. And that then will lead to the way you manage the risk and opportunities within the portfolio. So that's kind of a list of priorities. On page 7, we were shown very early on when we took on the mandate, kind of a chart of the structure, the governance structure of OHA's investment program. And so this is just sort of a draft. It's nothing that we're necessarily recommending, but a way to maybe streamline reporting back up into the board, and so therefore accountability and transparency. And the only thing there that you guys have added, well, since we came on, is this advisor to the board. And that's sort of the role that we're playing. And then if you wanted to bring in something like an investment consultant, and there probably should be a dotted line between the staff and the investment consultant, because they again would need to work closely, I think, with staff, but then report into the board. And then underneath that is the way your portfolio is kind of reported and structured in your reports right now. Although, when we dig into it, it's not managed and the decisions aren't made in a holistic view, kind of top down. It's really, you've given a lot of authority to the different managers to make decisions. And we can talk a little more about that later or in questions. Moving on to page 8.
Pedro, Trustee Trask.
Sorry, I think Trustee Trask, you're on mute if you're speaking.
I'm looking at pages 6 and 7. The board, the policy statement, I think definitely under your immediate needs, where you have on page 6, revise government authority to the board immediately, to the board. Hire investment consultant or OCIO. These things, when you say need immediate attention, I would like you to put down to the right of what you're advising me when we need to get it achieved by. Immediate attention could be 2 months. Is it 3 months? We have you on a 1-year contract. I need some assistance on this. But I would like to know, for the 5 bullet points on page 6, if you could give me a timeline so I can make sure that we get it before the board within that timeline. The other thing is that when I look at page 7, the investment consultant or the OCIO is not in my mind part of the OHA board. It is an individual or a company that is an independent consultant to the trust. Is that correct?
Couple of things. Yeah, in terms of a time frame, it does kind of depend on you and your colleagues in terms of how quickly you want to address these things. And you know that doing an RFP takes a certain amount of time if you want to hire an outside service provider for some of these roles. So, I can kind of go back and think about the timeline. I know we're trying to move forward with the investment policy statement as quickly as possible. But again, we need, that's why the document is sort of in highlights and red lines for you all to consider, because ultimately you're going to have to approve whatever that is.
Yes.
So we can do that, but again, it's going to require a little more of that, meeting before the meeting and getting to a point where people are comfortable, and maybe there's some, kind of executive session conversations that could be had, in the next meeting or two to do that. regarding the role of investment consultant or OCIO in terms of this draft kind of organizational chart, you do want to have I think, an independent consultant, although quite frankly, in terms of the investment consulting industry today, the big consultants often have different kinds of conflicts in that they're also managing assets. They're not just giving advice. So that's something to keep in mind. There are not many that are purely independent, if I understand the way we're talking about independent, but you do want them to not have conflicts of interest or address those conflicts of interest. You want them to give you honest, unbiased advice in terms of how to structure or manage or invest the portfolio. And those are the kinds of questions and issues that can come up as you develop your, kind of scope of services and requirements. And again, I think that's something that, as a collective body, you need to consider. But it's a good question.
One of the reasons why I'm asking this is because these things need our immediate attention. I absolutely agree. Now, my next question, Mr. Chatterley, what is your contract with my office, and how long can we expect to benefit from your assistance in this way? I mean, right now, I understand I need to either get things together so we can have an independent investment consultant or an OCIO that is not in this office. That I get. But given the training you're giving our board, that's why I was looking for a time frame so that we can plan ahead and get it into our calendar. But when I look at the graphic on number 7, it is not correct in my mind, because the investment consultant or the OCIO is independent of this board and not on this staff. Do you understand?
I think I understand. I think maybe the specifics of the contract is something I could discuss offline with you. If I'm
I understand,
looking at the
because you're an
trustee-
employee, but I don't want to let it fall through the cracks. We're not going to
Right.
come back and revisit this in 10 years, Joy.
Yes.
Your assistance and training is greatly helping us. And I'm concerned that before we get to where we need to go incrementally, especially with the immediate needs, this board has to address, I'm concerned that we will lose your assistance. And that is why I'm requesting this. Board, I don't know if you want to see it, but I make this as my personal request then as a board member, because I would like to take a look at your contract. We're not going to go back to OCIOs on the salary here. No, we will have an independent consultant or an independent OCIO. And when we take a look at the future graphs, Joy, please disconnect it, because it gives the impression here that it stays
Please-
under admin, and it is
Trustee-
not.
Trustee Trask, please state your point of order. Trustee Souza.
Point of order. I don't think we should be discussing that. That is not on the agenda.
Oh, okay.
It surely is. We're looking at page 6 and 7, trustees.
VJoy's contract is
Yeah,
not a
we
part
should-
of the agenda. Thank you.
Yeah, we won't,
I'm requesting it because we need the advice and assistance. That is why. And I will take a look at it as a trustee. Please forward it to me.
we can, Trustee Souza, did you have a question as well?
That's okay. Thank you.
Oh, okay. All right.
Okay.
Um,
Thank you,
go ahead,
trustees, Trustee Trask. Regardless of the contract, I'll try to be as helpful as I can whenever I can. So aloha. As for page 8, what I'm trying to do here is to sort of give you the sort of options. Actually, it's along the lines of, whether you want to use a consultant or an OCIO or internal management. These are the different options, I think, in terms of overseeing the portfolio. The first option there is the manager of managers approach. That's what you have now. So that would be like, okay, if you just want to keep things the way they are, maybe make some adjustments, that would be that option. The option number 4 is if you went 100% in-house with staff, which is, there are big plans and groups that do that. The 2 sort of intermediate steps there, 2 and 3, are the sort of the traditional investment consultant route, which you see like some of the public plans often use that. And then they can sometimes use specialty consultants if they're, some expertise that their general consultant maybe has less experience in, like, private markets or real estate or something like that. And you've seen that with other Hawaii asset owners. And then there's the outsourced CIO, which there's different levels of discretion, anything from 100% discretion to something less than that, some groups allow in terms of working with an OCIO. But again, those are kind of comments and questions. There are pluses and minuses to any one of these approaches. There's no one right answer and there's no one size fits all. It has to be what's appropriate for OHA. And while I'm happy to give my ideas about pluses and minuses, at the end of the day, it's not me, it's you, right, who have to kind of figure out the way forward. And those kind of conversations should happen before you come to a point where you're going to vote or recommend something.
Trustee Hulu, Lindsay.
I just want to quickly ask you, Bijoy, when you make these recommendations, could you put a cost on the side of each one? And I say this because I did ask about what an OCIO would cost, and their cost is like 300,000 a year. And I was also told by Bijoy in early days that a corpus of less than $1 billion really don't need an OCIO. So I think we should look at these recommendations with the dollar signs in the back, and then we can probably make a better decision.
Right. And I think that three of your sort of managers also have that kind of OCIO and investment consultant opportunity. So those are questions we can put directly to them. And sometimes they give dollar amounts, sometimes they give basis point amount. I'm not necessarily recommending any of them. There are over 100 sort of OCIO firms out there, and they're at least, 50 or more sort of credible investment consultants as well. But it all depends on the right fit and, the right sort of skill set that you want. But we can definitely talk through costs, and that should be part of your effort. And it's also, I think, helpful to maybe try and understand. I think staff has done some of this already in terms of looking at the costs of the current program and the way that you pay managers. And then that would be a good sort of like, okay, this is where you are. Is the cost of you doing something else more or less? Yeah, I mean, that makes sense in terms of cost benefit analysis.
Trustee Trask.
Could I just ask you, Vjoy, because when I looked at my notes from previous sections with you, we had talked about some of the ways that we could build up our strengths. And there was a mention about how others in our state were doing it. One of them was the ERA. When I look at the 1, 2, 3, 4, I mean, it's pretty clear that 1 and 4 are of no use to us. We're trust, but where is the ERA? How do they do theirs? They're the state retirement.
So the ERS, right?
The ERS, yes.
Right. I don't follow them that closely anymore. So I'm not sure exactly, but what I've kind of heard is that they do still have their general consultant. Then they have some specialty consultants in real estate and private equity. Staff is given some ability to make investments within a certain levels, and they have to report that at least once a year. And then they potentially, and so they are more working, I guess, hand in glove with the consultants. I'm not really sure. Sort of when we were there or when I was there, it was there wasn't as much discretion given to the consultant or to the staff. I think if you look at EUTF, a similar sort of situation with Kwan Yuan, who came and presented last time.
Yeah.
They work with a consultant. So I guess the more general answer is it kind of varies and it can evolve over time. And it needs to evolve and be appropriate for the institution and the experience and the abilities of, all the decision makers within that organization and their comfort with how they're managing the portfolio.
Thank you.
Okay, so I know we're moving along with time. Page 9, this is the investment policy review. So there are bullet points there, but I was going to just highlight, if you look at the attachment, which is the IPS that I sort of marked up, really the things that are kind of highlighted in yellow are just areas where I think that language is going to change, or maybe the structure of that is going to change. There are some red line version notes, and there are some comments there. So again, it's not making recommendations by putting this in front of you. It's just trying to bring your attention to areas that may need to be addressed. And what I would say is that in general, the areas that I think are emphasized here, other than just certain exceptions, are the idea of the manager's approach and the accountability to the board. That's sort of where was emphasized here. Other things that will fall out of that, like the discretion that's given to your asset managers, I think will also naturally be addressed from that. But there are some sort of inconsistencies with that if you don't have a manager approach, then that falls out anyways. But again, that's just sort of, again, it's just trying to bring your attention to the issues that I think ultimately you're going to be addressing when you redo these governing documents. Okay. Then I know there are even people making a move for the press thing. So, okay, the portfolio design on page 10, that again is more along the lines that, you're going to come back and consider, is this the appropriate best practice way you want to manage your portfolio or not? And that really kind of, I think, concludes my comments and session today. The rest is just the investment glossary, which hopefully also has some of the concepts that we've discussed in it. But happy to answer any additional questions. And I will note that there are some online resources when it comes to trying to understand, what does an investment consultant do? What does an OCIO do? Even what a manager of managers does. And, I can make that available to everyone, so you can view it at your leisure and come back with any questions or comments going forward. So thank you for your time, and I want to be mindful of that. Okay, thank you.
Thank you, Vjoy.
Thank you.
If there are no further questions for Vjoy, we shall move on to a presentation by administration on event sponsorship grants. And I will turn this over to our Pohana, Stacy.
Mahalo, Chair. At this time, I'm going to have COO Casey Brown share.
Mahalo Pohana. Aloha my trustees. This is your last topic today. I'm going to try to move moderately brisk as I know we want to get to the next events. And I'm going to ask Carla Hostetter to share her screen so you guys can follow along. And while she's doing that, I want to also quickly introduce the sort of the past and what is to be the future home of our grants team. And so Carla stepped in to help shepherd the grants team when prior CEO left. And so she's on. And we also have our grants manager, Kiala Newman, who's on, who's helped to improve and make improvements to the grants process that you guys all have been seeing and been aware of. The future of grants is going to be with Nini Alkavai High, who you were introduced to. So eventually we're going to have the grants program rest in our community engagement, right? Okay, so we have a new event sponsorship grant process. What is it? It's really an aggregation of existing grants. And so we're trying to take anything that looks, walks, talks like an event or like a sponsorship, and we want to consolidate them, put them under a simpler, more streamlined process. So on slide 2, the event grant sponsorship process. First and foremost, this is going to combine 3 existing types of funding grants that we have. One of them being that the trustees have, we know trustees are always tapped, bumped, requested by beneficiaries and community groups to fund all those good events that exist out there. We want to provide a process that captures that. Right now, there is a process, but it's not so formalized. Historically, you guys would have handled this through the trustee protocol allowance, which was much bigger. And then we also had a CEO sponsorship bucket, which allowed some authority there. But as a result of 1803, those were taken away. So you folks have been trying to deal with that on your own. And so we're trying to bring a process here that addresses that. We also have OHA Hui grants, which are event grants, right? They look and walk like sponsorship. And then we also have legacy sponsorships, which we put into the budget and you folks approve as a body in those line items. We're gonna put those all together, put them under one process. Okay, next slide. So this is the new event grant sponsorship process. It has an inoa, ho'a kua la hui. And if you have a question about that, I will ask Kiala to speak on that. So stop me if you want to know about the name. But going through this, you'll see this is a profile snapshot of the event grant process, the event grant sponsorship process. It's gonna range from 5 to 25,000. It will be an all year round application process. We're gonna have an online application. It'll be very simple, simple by design. This is not a large grant amount, so we don't wanna provide overly rigorous application process, right? For our beneficiaries and as well as our staff. Yeah, one award per year per organization. And this is set to launch, barring no other material feedback from you folks here. It's set to launch in April 1st. Okay, I'll pause here if anyone has any questions, and there's a couple more slides.
Go ahead, Casey.
Okay, the next slide is it's a process flow slide, but the main takeaway from here is really that we're gonna have rolling applications. It's open every day, all year. And what's going to happen is our staff is going to batch these applications every quarter, evaluate them, bring them to the board. You guys can review and approve. And so that's the main takeaways from this. It'll never close. We'll always have it open. Beneficiaries can go to the online application process. Trustees, when you guys are bumped, poked, you can send them to the website. It'll always be there, and our staff will be ready to process their application.
Steve Sue's up.
Thank you. So see if they're a legacy group, right? That's already approved in a budget. They get it every year. Could they also apply for this? Because it says once a year. Is that separate from the legacy?
This will be addressing those legacy sponsorships. So we will direct them to put an application into this process.
Okay, got it. Thank you. Thank you, Chair.
Trustee Hulu Lindsay.
Follow up to trustee Keone's question. If they're legacy, why do they have to apply every year?
We want to have some form of documentation of our funding going out, Chair. It was being done through the budget realignment and the budget planning process, which the main point that we want to hit is to make sure you folks are approving as a body and not as any individual approving any of these funding. So that's why it was in the budget. It's still going to come through as approval by a body yourselves, but we want to have little more. That's an area that needs a little more formal documentation. We want to add a little rigor to that, and also treat similar like grants consistently. Yeah,
And that's what we did when we approved the legacy.
correct.
We kind of put the like kind of, for people like Kekihula, Hara, Mayor Monarch.
Correct.
I mean, those, they're so busy. Sometimes they forget to apply. And I think that we should offer it because of the service they do for our lahui. We should have it on our calendar to give them that money. Why do we have to always make them ask? Because to me, it's like begging for money, begging for money. The Hawaiians are tired of begging for money. We
good point.
we should give them what we approved. And if there's a question by administration, then you ask the question of those organizations. But because sometimes, who knows, an emergency occurs, and let's say Kekuhula get canceled. Well, we're not going to give money if it's canceled.
Can I add to that? I'm sorry. So what is the time frame? Because they're already legacy. The process, I'm assuming for somebody new applying to this grant, will be a lot longer because they're legacy. Say the event is next week, they forgot to apply a month before, right? Because their legacy already approved. Does it just need to be an application that goes in and then they're good to go?
Yeah, yeah.
That's
So
kinda-
I
I'm
think,
assuming that's how it would work, right?
yeah, and as a renewal, we would have their info on file. So those that are kind of renewing annually, they would be evaluated very quickly. However, the plan is to batch these quarterly. So if we see those types of grants that are in a situation that they forgot to apply or whatnot, then we'd have to come up with a process to get that approval quickly from you folks. One thing that could help is the comment you just shared, Chair, is maybe there's a way, an evaluative criteria we could add that flags these legacies, so we don't have to put them on the burden of continuing applying. But let us think about how we can capture that if the board chooses to have that. Yeah.
I really don't see a problem with these guys applying. I mean,
Yeah.
they're throwing big events, they're throwing annual event. The only thing that usually changes is the event date, the
Yeah.
logistic stuff on their end. But I'm assuming if they want our $15,000,
Yeah.
they're gonna come for it, right? They're not gonna forget to ask for it, right? I mean,
Well, none of the legacies are that high. Actually,
I
it's a,
think there's one, no. Ours
Pardon?
not at 15, or was it 10?
no, the legacy grants that were approved by the board in the past
Yeah.
all had a $10,000 limit.
I thought ours was 15.
Chair, it's actually, we have some legacies that been higher than that.
I heard it.
They're
Well,
15,000.
15,000
15,
last year, 15,000.
That's what
It
I'm
was
saying.
raised,
Yeah.
and Merrimack went to 25,000.
Yeah, yeah.
But I'm
That-
familiar with that being the top dollar, because there are many legacy requests. And for the legacy, you know what that means? It happens every year.
Mhm.
And that's the point I was trying to make. Why do they have to apply every year when we approved them to have that money every year? So unless they're asking for more money, it should come before the board,
Just to be clear, what qualifies them to be a legacy? Like, say we started something this year, we're saying it's gonna happen for the next 5 years. Is that considered legacy, or you would have had to have 5 years under your belt already, or
No,
10 years?
no
what?
more that kind.
No more that kind of restriction.
No.
So what is a legacy? I mean, to
Like Kikihula, it's
Yeah.
just, Mayor Monarch. In fact, even the Eddie was included.
Yeah.
Not only hula stuff,
Yeah.
but most of the legacy are cultural things, cultural. And that's like important to our lahui. So, the whole point I'm trying to make is I don't want them to feel like they're begging us, because that's their right to get this money. Otherwise these things would not happen in our community.
But there needs to be some kind of paper trail.
Correct. So
I mean, we wanna make sure-
administration will do its best to balance not overburdening any one of our grantees, especially the legacies. But by chapter 1017, we do require a minimum amount of documentation, like an application. So we'll try to make that as simple as possible.
Maybe we can send it out prior to our event,
Sure.
so that we remind them, we got money for you folks, fill in this form, send it in. Thank you.
Trustee Trask.
That I just want to say that I'm so happy to see this staff really a good job on this. And I'm so happy that we can launch if we're gonna launch in August, I just wanted to say to the staff, when we send in our articles for the previous month, I'm hoping that the August edition will dedicate a full page to what we're doing here. And also, I'm so happy to see the simplified grant application. I think this is just a great job. Good job, staff. And we can get the word out ourselves. If we get all the articles in right before August, we should be able to make that deadline and have it come out and be featured in our August Kawai Ola. Good job.
Mahalo nui, trustee.
Trustee Kulu, Lindsay.
Casey, can you please share with the board how many people came out for the grant training statewide? Because I know in Maui it was record. We had over 40 people in that night.
I'm happy to. I'm so proud of the team, and I'm gonna actually turn to Kiala. Kiala, would you turn your camera on and maybe share some of that stats?
Also, I also wanted to ask a question regarding the new grant application training that we've had throughout the islands. Before Kiala speaks, if she can also explain what the general theme of Mana'o that was shared and asked in terms of what the need is and what we are doing that is good for them. And if we can continue, if that can be shared as well. Thank you.
Is Kiala on?
Yes. Aloha nui kako. Aloha. So mahalo nui for having me today. Mahalo nui ka Board of Trustees. Mahalo. As far as our grants training turnout, it was wonderful to be able to visit starting in Maui, heading over to Kauai, Oahu, virtual, heading over to Wai'anae, Molokai, Hilo and Kona, just being able to kind of hit all corners and communities, or at least trying to, throughout the Pai'aina. Very, very fortunate to meet a lot of our different organizations and really get some face time. Yeah, we haven't got out into the community for, I believe, what has been over 5 years. The grants program hasn't been able to have that kind of FaceTime with the community. So that was a blessing for us. If I'm not mistaken, for our virtual training, although everyone was not able to get connected, we did have over 300 individuals that were registered. I did not do a final tally, but I can assume if I were to take all the numbers, compile and kind of redact the duplicates, we would be well over, I would say, in the 500 to 600 range, of individuals representing different Native Hawaiian serving nonprofits throughout the Pai'aina. So of course, very, very fortunate to be able to get out there and share our mana'o. And of course, this is what I shared in our in the trainings, that what we expressed and shared was a lot of hard work, right? And a lot of hard work that went into revamping this process and making it more accessible and making it more feasible for our nonprofits, and to really get out our Native Hawaiian money to back to our Native Hawaiians, right? So that's the overarching goal, of course. As far as what Trustee Akaka has asked of me to share, I believe that what I received was a majority of very positive feedback. Yeah, a lot of our nonprofits were very thankful and very hopeful, first and foremost, of the streamlined process, of the streamlined eligibility requirements, the way that I tried to break it down and really connect with them, kanaka to kanaka, and just sharing how I envision our process, and and just moving forward for the OHA grants program to be as transparent as possible, and that we will do everything in our power to be as helpful as we can in our capacity. We did also receive a lot of feedback, especially from the smaller organizations regarding match funding requirements, right? So that that has always and will continue to be an issue. So match funding requirements, although lowered from 20% across the board for our larger community grants, now reduced to 15% across the board, seems very much so to still be an issue for our smaller grants. And also the fact that our grants are by reimbursement, right? So that the fact that our nonprofits do receive an initial payment of 25% upfront, and then as they expend each quarter and they get their reports into us, and we review those reports, we're able to reimburse them for the expenses that they draw down, so to speak, each quarter. So I'm hoping that that kind of helps to bring light to some of the bigger issues that were brought to my attention, and the outlying and outstanding concerns, largest concerns that were brought to my attention in summary in these past in-person trainings. Please know as well, as I have a captive audience here in the live stream, that the on-demand training will be coming very, very shortly, along with Kalamai resources resources for the application. Yeah, so more resources to help our applicants further along their application process, and then the on-demand training as well. Mahalo nui.
Thank you. Trustee Luana Lapa.
Aloha Kiala. I just want to say, you guys, I was there at the Molokai grants writing workshop, and it was the first time I sat through an entire workshop of this nature to see what our beneficiaries go through in the application process. And I just want to say what an excellent job Kiala and Ahia and the staff has done in the grant writing workshop process. I've seen a lot of happy faces, which is really great to see. And I hope that many of our beneficiaries will have a chance to be awarded a grant, providing they've done everything. And of course, with the support of our staff to help make this process so much easier for them. This is exciting for us to witness and see in such a long time. And I've been advocating for this grant writing workshop for quite a while for our people, especially in Molokai. And I'm happy to see that we can have a continuation, maybe a follow-up or something. That would be great, because it keeps people engaged when they know that we really do care. And we want to see to it that I'd love to see everyone get an award. So again, thank you, Kiala, for all of your support. And I hear you guys did a great job. I don't know if Ahia's here, but hey, thanks.
Are there any other comments or questions?
I can summarize the last two slides real
Oh,
quickly.
okay.
Yeah. So last two slides, I'll summarize real quickly. The eligibility requirements is for you folks to take a look at that. And these are not unusual requirements, and these will be serving as a way to evaluate the grants, because I know Board of Trustees, although you'd want to award every one of those that apply, to Trustee Alapa's comment, administration wants you to provide you enough info in case we don't have enough budget to simply award everybody that applies. So these are the requirements we're going to rely on to do that evaluation for you folks. And that's it. The last slide is really just a quick glimpse of what the online form will look like. If there's no other questions, yep.
Trustee,
Yeah. I'm Paul.
Trustee Ahuna.
Oh,
Sorry, can you go back to the slide that had all the box, right here? You see how trustees attend events as available. I just want to just make a comment.
Sure.
Not all the events we can attend like Mary Monarch. So I just hoping maybe in the future we can talk to them. Maybe we can get on a list or something.
Gotcha. Yeah.
Thank you.
Yeah.
That's all.
Yeah.
I'm not grumbling or
Yeah.
anything.
Yeah. Yeah. Mahalo, trustee.
Okay, well, if there are no further questions, thank you, Casey and Stacy for that, all your work. Are there any announcements? Trustee Hulu Lindsay?
I want to call on our Pohana to briefly report to our board on the trip to Fiji.
Mahalo, Chair. And I will follow up with a more formal report to trustees. You know, I think it was a very informative and instructive trip for us. And I think it was valuable for Chair and I to go as a precursor to FESPAC so that we had a good understanding of what the expectation of it is, or what the expectation of the commission here in Hawaii, as well as OHA, in terms of how we will receive delegations. And there will be over 25 delegations coming from Pacific nations. And what is that level of expectation of ho'okipa, of cultural protocol that we should be preparing for? But above and beyond that, I think it was really important for us to get reacquainted with our Polynesian cousins prior to meeting in June. You know, you don't want to come in June and be the first time you're doing the meet and greet. And the traditional tribal leaders, Talanoa would be like our halavai, our meeting. It was really good for Chair to be able to meet with the other tribal leaders, one, to do the meet and greet, but two, to really start setting the geopolitical agenda that will be talked about when they all come in June. And so to have some consensus and some coherence around what are the top issues of our Polynesian people, that was the beginnings of that agenda setting. So things like climate change, indigenous rights were just a few of the topics that were discussed at the highest levels of the leaders at the table. And so that when June comes, it's not a dog and pony show of culture. It's much more about what is our place in the Pacific, but more importantly, as a political bloc, this voice of policy and advocacy in a global stage. And FESPAC really sets that, that arena for those really difficult and sometimes it seemed intractable issues that we as Polynesian peoples are dealing with. As individual nations, very difficult to have any kind of impact. But when you have 29 nations coming together as a political bloc, now you have and force of influence and impact. So I want to just mahalo Chair. Again, you know, she was meeting with the highest levels of leadership from Samoa, Tonga, Fiji, Aotearoa, and then Hawaii. And I think she represented Hawaii and OHA extremely well. I was very proud to be part of the delegation from Hawaii. And I'm even more confident knowing that when the 29 nations come to Hawaii, Hawaii will be prepared. The Office of Hawaiian Affairs will be prepared. I would like to note Helama Farden was also on the trip, who is going to be our new Senior Director of Hawaiian Cultural Affairs. So the level of confidence was even bolstered even more so because he now is also very much clued into what the expectation of what the cultural protocol will be, not only for the Office of Hawaiian Affairs, but for Hawaii. And I'm very excited to receive not just the leaders from the 29 nations, but the thousands that are going to be coming with them. And so I think we're going to be well prepared. Chair, anything else?
Any other announcements? Trustee Trask.
You know, I had wanted to just say that when we take a look at FESPAC, you know, I'm kind of concerned and I want something to get on the board agenda because we have a trustee in charge of protocol. It's Trustee Souza. And over the last few months, I've talked with some of you about what event OHA will host. We don't even have our Kihei designed yet. I've talked with some of you about that. Shall we do one print for OHA? A chair reminded me that our symbol is the kalo. What a beautiful one. But in terms of our own protocols here in Hawaii, I haven't seen a single thing. We have a protocol trustee, but does he have a budget? Can we get this on the agenda soon? And also, we should be hosting something. You know, I mean, it's in Hawaii. They won't come back for 45 years, for 45 years. So are we gonna, you know what I'm saying? I mean, I would like to see the protocol chair brought in and given a budget, and let's start taking a look at Kihei and other things.
Guys, thank you, Millie. We gotta keep this to announcements and not a discussion on FESPAC. Everett, did you have a?
No, it was mainly to the same point, Chair Waihee, but thank you. It's certainly an area of importance for this board and OHA, but we don't want to engage in an extended discussion or deliberation on this.
Okay,
Council.
are there any other announcements, Trustee Ahuna? Okay, okay. If there are no other announcements, can I get a motion to adjourn?
Second.
Okay, is there any discussion? Hearing none, can I get a roll call vote?
Trustee Ahuna,
Aye.
Trustee Akaka,
Aye.
Trustee Akina,
Aye.
Trustee Alapa,
Aye.
Trustee Galataria,
Aye.
Trustee Lindsay, Trustee Souza,
Aye.
Trustee Trask,
Aye.
Chair Waihee,
Yes.
9 yes votes. Meeting is adjourned.